And today is the beginning of the Resource Investors Forum, two-day event in Newfoundland, Canada. Joining me will be one of the guest speakers, Mickey Fulp. We're going to talk shop. So let's get going. Mickey, how's it going?
Thanks for having me once again, Alex. It's always my pleasure to appear with Kitco.
So Mickey, you spoke earlier today regarding graphite, what it takes to make a good graphite deposit, what do you look for? So what can you share with our readers?
Well, there's many criteria for a graphite deposit to succeed. It needs to be high grade. It needs to have a large percentage of large flake graphite. It needs to be very close to infrastructure, power, port, rail, highway. It needs to be a deposit where it can produce a product that customers want to buy, because this is an offtake contract arrangement. So a successful graphite mine must produce a product that satisfies a customer's need. And then potentially metallurgy is always a fatal flaw, as it is with most deposits.
Being in Canada, as the conference is, as we're based in Canada, do we fit the criteria for good deposits here in Canada for graphite?
Well, Canada does have significant number of graphite deposits, most generally in the Grenville province, which would be in eastern Ontario, western Quebec. You require generally high-grade metamorphic rocks, and so that belt of rocks is very favorable. So yes, Canada does have some good deposits. They have had producing mines in the past. In fact, the Timcol mine is recently shut down temporarily, but that mine is in and out of production. It's been one or two others in Canada that have produced in the past. But once again, we're highly dependent on China in the Western world, produces about 70% of all the natural graphite, and we're a bit at their beck and call. So the graphite bubble that was created a couple of years ago, there were two junior companies. By a rise in price, temporary rise in price, there were 50 graphite companies. Now, by last count, there's 90 or more, and I dare say that the great majority of those projects will fail.
And sticking with the possibility of failing projects, there's always gold that comes to the forefront. I know it's been rehashed and spoken about over and over, but again, there's been another drop in gold prices. Exploration's already been cut by companies. There isn't much exploration going on out there. Do you see maybe an uptick in possible exploration even with gold prices this low?
Well, I don't see for the majority of juniors in gold space. Most of them are on their way out. They are dying a very slow death, and it's a process that's going to take a period of time to be complete. That said, exploration projects with good results in gold space are continually being rewarded. So the market is in tune and looks favorably upon discovery. The problem is we don't have very many discoveries. There are just not enough good gold projects or projects for any commodity out there to satisfy all the juniors that have come running into space during the raging bull market of 2009 to early 2011, let's say mid 2011. And so there were a lot of bad projects that need to go by the wayside.
Right, and with that junior exodus, it's going to leave some projects behind, some that would probably be interesting to mid-tier gold producers, senior gold producers. We haven't seen very, very, very little M&A up to this point. Do you see maybe an upturn coming up?
Well, there have been a couple acquisitions. Alamos Gold has acquired a couple of nice advanced projects over the last 3 or 4 months, so they've been very aggressive. But part of the problem with the majors and the mid-tiers is they've been so mismanaged And that's the beginning of the demise of the temporary demise, I would say, of the gold mining industry. But the companies, producers have focused on quantity of ounces versus quality of ounces. They've adopted a growth philosophy versus a value philosophy. Gold mining is not a growth industry, it's a value industry. So until the majors and the mid-tiers write down all their bad investments and raise their cutoff grades and cut out the high cost deposits and go to high margin deposits, I think the M&A activity will be somewhat suppressed. But certainly there are good distressed projects out there that are available. Probably what's lacking now is the ability of the producers, because their books are such a mess, because they cannot make money at the present gold price. We're not seeing a lot of M&A activity at the present.
All right, Mickey, before I let you go, I know you're an outdoorsman with a slant towards fishing. Lots of cod out in Newfoundland. You're going to get out on the water and reel some big ones in?
Well, I certainly am. I've got a trip book with some good old prospectors here, gold prospectors in Newfoundland, and everybody knows who these guys are. They run 2 or 3 junior companies, and we have a cod fishing trip on opening day on this coming Saturday, and we're very much looking forward to that.
Sounds nice, Mickey. Thank you very much for joining me today.
Well, thanks a lot. Always my pleasure, Alex.
And thank you for watching. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can hit me up on Twitter @Alex_Letourneau. Cheers.